Ladies and gentlemen, it's 6:30. As I told you, I have Nadiyah Bolling, the one and only. Thank you for coming in. Thank you for everybody in the crowd. I'm streaming over here on YouTube. Make sure you check that out. But we are here. I'm glad you took your Thursday night to come in and experience what behind the scenes. I saw the presentation. We did our pre-production meeting. We know exactly what she's going to do. So again, you came in, got Nadiyah Bolling. She's going to talk about how your marital status and your relationship, so you don't have to be married, she's going to break it everything down, affects your tax situation. Now, I'm going to give you my bio for Nadia. I met her. She is my personal accountant extraordinaire. She helped me collect all my infinity stones. So now all my family members are business owners, and I send them to her. She does all their stuff, handles their business, along with other people in the community. You may know her. I know she sings. She may talk about that. She is a live performer, and I'm thank you for coming in tonight. Nadiyah, give them your formal introduction. I'm gonna get out your way. I'm gonna let you go.
Thank you, Quentin. I appreciate you having me. Well, my name is Nadiyah Bolling, and I am a tax accountant. My office is in Windsor, Connecticut, 96 Paquonic Avenue. I not only deal with taxes, but I also deal with compliance for small businesses, funding for small businesses, business credit, personal credit, trademarking, copywriting, those types of things. Anything associated with the small business, I take care of in my office. I have several independent contractors that help me out, from travel to tax services. And yes, I'm also a certified travel agent with the International Air Traffic Association. And yes, we have many services that we provide here. We just try to make it a one-stop shop for small businesses. We also offer bookkeeping and payroll. So if your business is ever interested in any of those things, we are definitely here to help you. I'm here Monday through Saturday, which I try not to be 24/7, but like, this is my baby that I cultivated into something huge. So I'm grateful to be working in the community. It's something that I really push because we need our businesses to stay in the community. We need to patronize our businesses. I love to walk into businesses and see people that look like me. I think it's important for our children. But okay, that's a little bit about me. And like Quentin said, I also sing. I sing at funerals, weddings, that type of thing, and live with bands. Just that was just a side note. But back to the topic. I think this topic, which is how marital status and relationships can affect your tax situations, is something that is not talked about in the African American community, because I think it's an area that we don't want to touch. We think that the system, the tax system, the financial system, the banking system is not for us. And technically, originally, we were not included, but Lord, we're here. So we're going to make the best of the situation. As we know, we've heard about redlining. A lot of systems were in place for us not to gain any financial knowledge or to grow financially as a community. But what I want to do for everyone is to explain why taxes are important, to know what's on your pay stub, as far as how you're filing, and your relationships, how they affect your tax brackets and how much tax you pay. Now, I know a lot of people don't know the nitty gritty about taxes, so I'm just going to explain it in the best way that I know how that the average person can understand. So basically, when you go to your accountant, or if you go to H&R Block, TurboTax, or whatever the case may be, you are paying a bill, not only to H&R Block, not only to TurboTax or your accountant, but you're paying a income tax bill. A lot of people don't realize that you're paying this bill based upon your income. Now, everyone's bill is not going to be the same, only because everyone works different hours. Some people are salaried, some people have children. The list goes on and on. Everybody has their own different financial situation. But the key is with taxes is the starting point, which is your filing status. Now, there are a couple of filing statuses, and I'm sure you've heard of them. The first one is single. That means single, that means you have no children and you are not married. Second one we have is head of household, which means you have a dependent. That does not necessarily mean that is just a child, but it can be a dependent. It can be a stepson, a mother, an auntie that you're taking care of. You're providing more than 50% of support for them and they're living in your home. So head of household, you have to have a dependent and not be married. Now then we have married filing separately. So you have a lot of people file married filing separately, mainly because maybe the spouse has some type of situation where they have a liability. It could be they owe student loans or they behind on child support, which will affect the other spouse's return. But there are ways to get around that. I'll talk about that a little bit later. And then we have married filing jointly. Now, married filing jointly is the the key to one of the tax savings. Now, married filing jointly is when you are married, you may have children, you may not, and you file together as a whole, as one. Now, the significance, well, the last one is actually qualifying widower, which means that your spouse has passed on, and you only be able to do that after only for 2 years after they've passed on. But that's basically similar to married filing jointly. But now the significance of being single or married or head of household is that each of those filing statuses has a standard deduction. And when I say standard deduction, it's basically a tax break that the government gives you depending on your filing status for your taxable income or your earned income. So for instance, example, say for instance, a single person makes $50,000, right? If they make $50,000, their standard deduction is $12,950 for this tax year of 2022. Now, the standard deductions, they change every year, but we're going to work with the ones from 2022. So for this particular year, say a single person makes $50,000 earned income. Now you have earned income and you have unearned income, right? Now, unearned income can be something on the lines of unemployment, or retirement, a pension. Those things you have not earned in that particular tax year, right? So it will be considered unearned income. Now, you take your earned income and your unearned income and you combine them together and you get your adjusted gross income. I know a lot of people heard that term AGI. What's my AGI? A lot of people don't know what that means, but that's what it means. It's the total combination of your income with any adjustments associated with it. And some adjustments may be if you paid interest on your student loans, that will decrease the number. So basically with taxes, what you're trying to do is decrease the amount of taxable income. So back to what I was saying as a single person. Say you're a single person, you're making $50,000, that's your AGI, that's your total income. Now, you made $50,000 as a single person. The government says we're not going to tax you on your full $50,000. We're going to give you a tax break of $12,950, a standard deduction, right? So what that means is, okay, we take the 50, we subtract $12,950 from your $50,000. That gives us $37,050. Now that is your taxable income. Even though you made $50,000, that is not your taxable income. Your taxable income is any adjustments or any deductions or any credits that have been awarded to you at that particular time, right? So now we have the taxable income, say it's $37,050. That number, that taxable income, then gets put into those miraculous tax brackets that everybody's heard of. Now, as a single person, you are paying the highest tax. The government, the US government, is really based upon interest. It runs on interest. It runs on people in the economy moving and you spending money, right? Normally, the government feels that a person that is single does not have a family. So they're not looking really much to buy any houses, any cars. They're not paying for college for children, those types of things. Really, the majority of your income may be coming into yourself if you are single. So you get taxed the highest. As far as the tax brackets are concerned, you as a single person pay the most tax. So normally that's why your refund isn't a large amount, or you may owe because you pay the most tax. Now there are ways to get around that also, but we'll talk about that another time too. Now we have, what do we have? Head of household. I'm going to go with head of household. A lot of people in our community fall under this particular guideline. Head of household, meaning, okay, I may be a single mother or I may be a single dad and I have children. Now, with that being said, a single person, remember I talked about that standard deduction? Each filing status has a different standard deduction. For a single person this year is $12,950. Now for a person that is that has a dependent and is head of household is $19,400. Now think about it. Now say if I am a single mom and I have a daughter, right? And I'm making $50,000 a year. Now remember the single person, their standard deduction was $12,950, but now mine is significantly higher at $19,400. So say if I make the $50,000 minus $19,400, my taxable income is $30,600. Right? Now remember, you're single. You were making the same amount as me, $50,000, but your taxable income is $37,050. Now, do you see the difference? Being a single person, your taxable income is significantly higher than mine. So if your taxable income is higher than my taxable income, you are going to pay the most tax. Now remember, we both earned the same amount of income. Now you see how being single versus being someone that has a dependent affects your tax return. Now, I'm going to go to married filing jointly first before I go to married filing separately. Now, married filing jointly to me is one of the best ways to file your tax return. Now, remember, we talked about that standard deduction that every filing status has. Now, for married filing jointly, it's $25,900. So you automatically get a $25,900 deduction off of your earned income. So for instance, remember, when you file married filing jointly, you're filing as one, right? You're not filing separate income. So on your return, there will be no separation of my spouse makes this, my wife makes this. Your income is combined. So for instance, say your husband makes 50 and you make 30. That's $80,000 of earned income. So we take that 80,000 and the government says, okay, that's your earned income, but we're not going to tax all your income. So we're going to give you that deduction. So say if you made 80,000 collectively, you and your spouse, you automatically subtract 25,900 from your earned income. That gives you a taxable income of $54,100 combined. Now think about it. If you filed as a single person, you will be paying more tax than two people that come together. In our community, a lot of us do not get married. And we think that when we file our return as head of household, that we're coming off, or we're getting this miraculous refund or savings, when in general, you're paying the most tax every week when it's coming out of your check. And then when you file your return, even though you have a refund, you're still paying higher tax than someone that is than someone that is married. So what is plaguing our community tax-wise is that we have the lowest income, but paying the highest tax. Right? So now you have I'm going to say the elite or the upper classes that are owning businesses. Now, a lot of us in our community are owning businesses because it is a way to escape some of the tax burden if you don't have a business. Right? So it is the significance of your filing status when you start your return determines your taxable income and the tax brackets that you're going into, which determines your tax bill. Now, the other thing a lot of people don't understand is that when you have federal withholding coming out of your check every week they're taking out state tax, they're taking out federal, they're taking out Connecticut paid family leave, food, unemployment. They're taking out all these things that get spread out to all these agencies, right? That federal withholding that comes out of your check is a prepayment towards this bill. And people don't realize that. So me as an accountant, I come up with your bill. So for instance, say your bill is $6,000. Now I look at your W-2, and that second box, it has your federal withholding. That second box says, oh, okay, Charles has made a prepayment of $5,000 towards his $6,000 tax bill. Now, if Charles' bill is $6,000 and he only had $5,000 for the year of withholding, because you got to think about it, a person has to work the full year first. They have to work the full year first to get a total income. So the government can't give you a tax bill in the beginning of the year because no one knows what's going to happen towards the end of the year. So they just have you prepay every time you get paid towards that bill. Now, if your bill is short, for instance, with Charles, his bill was $6,000. And he had withholding from his check from the whole year of $5,000. He owes now $1,000. Now, if Charles' bill was $6,000 and he had withholding from his check, from all his checks for the whole year of $7,000, Charles gets a refund. And this is how it works. It's an overpayment or underpayment based upon the federal withholding you have prepaid out of your check every week for the year. So when people come in and they say, "Where's my money?" You can't get money that you didn't put in. Now, there are some exceptions. You have credits. I know you heard of the child tax credit. You got retirement credit. You got mortgage interest credit. You have so many different types of credits. Now, the credits that you are receiving from the government, and actually you have the earned income credit. Those credits are an offset to your bill. So for instance, Charles, his tax bill was $6,000. If Charles has 2 kids, the child tax credit is about $2,000. It changes every year, but $2,000 per kid. So if Charles's tax bill is $6,000, he has 2 kids, that's $4,000. That's a credit toward his bill. So now Charles's bill is only $2,000 now, but remember, you still have that prepayment. So if Charles' bill is $6,000 and he has 2 kids, and that is $4,000, his bill is $2,000. He made prepayments of $7,000. He has an overpayment of $5,000. That's one way that people receive these huge refunds. The other way is with the earned income credit, which the government says, hey, you know, here's a family, they have 5 kids, they're making minimum wage, they do not have enough money for the year to be able to take care of all these children. They are living below the poverty level. So us as the government, we are going to give them a little push, a little extra, a little something else to help them get over that poverty level. So when you see these huge refunds, $8,000, $9,000 for certain families, is normally because they are living below the poverty level. So if combined they're making only $20,000 or $30,000, the government gives them an extra 8 or 9 to kind of bring them over the poverty level. So in a combination, they're only making $40,000, but you do not get that benefit because your salary is already higher than or over the poverty level. So it just depends on your taxable income. Now, we went over single filing status. Now, remember we talked about single filing statuses. As of now, it's $12,950 deduction off of your earned income. And then you have head of household is $19,400 off of your adjusted gross income. I should have said adjusted gross income, right? So your total income, all your income combined, then you take that deduction, and then that is your taxable income. Right? So now you have married filing jointly, which is $25,900 deduction, which can be depending on how much you make. If you are married and it's a combination, you're automatically getting $25,900 off of your earned income, which is money that will not be taxed. So when you do not get married, and not saying marriage isn't for everyone, but tax-wise, it carries the most benefits. You get the most deductions and a lower tax bracket. So you get the most deductions and you're paying less tax across the board. A single person, they have the smallest deduction and they pay the most tax. So the government encourages marriage because when you get married, 9 times out of 10, you're buying a home, which is a mortgage, which they make money off of your interest. You're buying vehicles, minivans, doing all types of things for the children, which boosts the economy, which promotes growth. So now we have the last one. I'm just going to go into that really quick, which is marry filing separately. I put this last because I see it often when couples come into my office, and I have a big issue with it only because of the reasoning behind why they're filing separately.
New York, so kind of a homecoming for Walker Brown.
Oh, I can't quite hear you. Hold on. Could you put your if anybody has any questions, could you put them in the chat for me? And I'll definitely answer them for you. Now, as far as marry filing separately. Now, a lot of times couples file, if they're married, they file separately if one of the spouses has a liability, which means they're defaulted on their student loans, they have some type of federal liability, it could be, or even state liability, and it could be child support. Which means if you file together, any refunds will go towards that liability. Right? So a lot of times the other spouse is like, I don't have that liability. I do not want to deal with you. That's your child support. I don't want to be involved with that. I'm going to file marry filing separately, which hurts you even more. Because when you file marry filing separately, they put you back into the single filing status. And what happens when you pay? What happens with the single filing status? They pay the most tax and less deduction, in the smallest deduction. Right? So you're married. Technically, you are supposed to get that benefit of paying less tax and having the highest deduction, but you're not because of a liability. Now, there's a way to get around that, and you can file the endangered spouse form, injured spouse, I said endangered, sorry about that, injured spouse form, right? To avoid the other spouse's liability, but still file as married and still get those same tax benefits. Now, does injured spouse work every time? No. I haven't had it in an occasion where it didn't, but the majority of the time it does work, and the other spouse will still get their refund. So you're getting the tax break, the deduction, the lower tax brackets, and you're still getting your refund filing the injured spouse form. Now, a lot of people don't know that. Even when you're filing marry filing separately, you still have to realize that now you're not eligible for certain credits that you would if you were filing single, had a household, married, filing joint. So not only when you file separately are you in the lowest tax brackets, the highest tax brackets, but lowest standard deduction, you get penalized for that. So you won't be able to get the earned income credit and other credits associated with your tax return when you do that. So now you've separated yourself, you're married filing separately, now you're paying the highest taxes. So what you want to do as a family, or even if you're single, in definition, is to lower your taxable income as much as possible. I know some people, they come and they say, oh, Nadiyah, I've been owing for the past 5 years. I'm single. How do I get out of this? Now, yeah, you can just increase your withholding and say, okay, government takes $60 more out of my check. That's one way to get around it, $70 more, however much you're short as far as your bill is concerned. But that isn't productive. And it's not really beneficial to you as a single person. Now, what you want to do is create some type of pre-tax income for yourself, which means some income that is not taxable. All the income that you earn is not taxed. A lot of people don't know that. So if in your job or your employer will offer pre-tax programs. One of them is a 401k, 403b, any type of any retirement plan. Then you have HSA. I mean, that's being prevalent because a lot of businesses cannot afford healthcare universally for all their employees anymore. So now you have to put a portion of your bill. That's what HSA is, right? A health savings plan with a high deductible, right? You're going to see that more often, right? That is a pre-tax program. It's a medical program, pre-tax, which will lower your taxable income. And what I mean by that is, for instance, example, say if you're making $50,000 and you put $10,000 into your 401k, you will not be taxed on your $50,000. Now you'll be taxed on $40,000. Now you'll be taxed now, and then now you're starting with the $40,000. After that, then comes your standard deduction. So you already lowered your taxable income. So the lower your taxable income, the lower your tax bill. And that is where you're trying to go. So, and this is why your filing status is so important. It's not just, oh, I need my money, or I need a bank refund, because you do not want to use the government as a savings account. You want to be financially disciplined to save money in programs that will make you money. Because when you're sending your money to the government and you've overpaid the government, you cannot call them and say, hey, my breaks need to be done, IRS. I need some of that money. I overpaid you. You can't say that. But even if you have a 401k plan or some type of savings plan, you can at least borrow against it in the time of need. When you overpay the government, you can't get it back until you file your tax return. So filing status is definitely important when thinking about future plans for yourself tax-wise, because people don't realize that you are put on a basically a price tag when you get hired. For instance, Charles is worth $20 an hour. Sam is worth $30 an hour. You are spending 40, 50 hours a week at a place that is removing funds from your check, sending it somewhere else, and you have no clue where it's going and why it's going there. You just want to be cognizant of where your funds are going and how they're being used. And just because it's showing up on your check stub does not mean that it's correct. So now you notice everything is digital now. You know, they don't even give out check stubs. You got to go online. So, and this is one of the things I really don't like about that part, is because now people really are not checking it out at all. They're not checking their stub at all. They say, okay, it looks about right. Oh, I think this is about how much my check should be. But they're not physically checking it. So they could be taking an astronomical amount of taxes out of your check, and you're going to be significantly overpaying your bill. Now, the key is, some people say, I don't really care about that. I just want my refund and because I need to buy a TV or a car or whatever the case may be. But that is a habitual cycle that is really considered financial negligence on your part, because all year round, you are having the most amount of tax taken out of your check to get this small refund, $3,000, $4,000, right? You get the $4,000, you spend it because you're behind, because the majority of the tax is coming out of your check the whole year. So now you're behind. You get this $3,000, $4,000 refund, you spend it in 2 months, not even. You're back to square one again of struggling and being broke and can't make it, and you're trying to figure it out and borrowing money. And you do not want to create that type of cycle. You want to be financially aware of what every dollar in your household is doing. And one analogy I really like is, you have 3 classes, so to speak, in America. You got the poor, the middle class, and the rich, right? Now, people think that these classes have to do with your financial situation, how much money you have. And it doesn't. It has to do with mindset and how you view how every dollar of yours works. Now, for instance, a poor person has the mindset that they are supposed to go to work and come home and pay bills. That's what they feel their dollar is worth every time they go to work and they come home, and I gotta pay my light bill, and I gotta pay my gas bill, and I gotta pay my rent, and that's where their mindset stops. Right? You have the middle class. Their logic is, okay, I'm gonna go to work, I'm gonna come home, I'm gonna pay my bills, but you know what? I got A1 credit. I can buy whatever I want. I got credit cards. My credit is 700, 800. You can't tell me nothing. But with that mentality is that you're creating debt for yourself. If you're not creating a mindset of, I need something working for me. Now, a rich person's mindset is that every dollar that is spent, or the majority of dollars that are spent or are used, has some rate of return. So being poor or being rich or being middle class has nothing to do with the amount of money you have in the bank, because anyone can make money. It's about your mindset and how you feel money works. Wait, hold on. I see I have some questions in here. Let me stop. Okay, take a look.
I can read them off. I can read them off to you if it's easy.
Okay, read them. You can read them.
I got you. So these are from the stream over here. First one was, how can owning a business save me money if I file married filing jointly?
Okay, great question. Now, there's a couple of ways. Now, the first 5 years of business, 2 to 5 years of business, normally you're operating in the red, which means there's no profit in the business, right? So now it just depends on what type of business you have, but I'm gonna assume that it is an LLC, right? So if it is an LLC, which is a pass-through entity, which is associated with your personal income, we're just gonna say that, right? So those two get filed together. So when you file your personal income, your LLC is filed with it. It's just on a different form, which is called a Schedule C, right? So this Schedule C has a breakdown of the revenue from the business and the expenses and the profit and the self-employment tax that you're going to have to pay. Now, this is how a business works with your personal income, your W-2 income. So for instance, if you and your wife You guys make $80,000 together combined. Now you have your profit. Now remember, in business, you're being taxed on the profit of the business, not the total revenue coming in. So you have revenue minus expenses gives you your income. That is the profit of the business. So that is what you're getting taxed on. So for instance, say you have a detailing business. The detailing business brought in $30,000. It was $20,000 worth of expenses you spent towards the business. You have a profit of the business of $10,000. That $10,000 is going to be added to that $80,000 that you and your wife have earned as far as income on a W-2. Now, how it saves you money is that all the expenses associated with running the business is not taxable. So the key is to have expenses of the business that are associated with how you live so you can write it off. For instance, fuel. Even though you can't write off 100% of the fuel, a portion of it can be non-taxable. If you did not have the business, everything would be taxable. Now, does that make sense? I'm not sure who asked that question, but
It's on the side stream. All right, I'll give you the next one. So the next one is, if I have a living partner, is there a way for me to file taxes to save money? Meaning that they're
well,
not.
and that's the issue. It just depends on the situation and how much income both of you are making. Now, it just depends if either of you have children or not. You know what I mean? So for instance, if the male in the relationship has children and the children are living there, and the female has children and they're living there, the best option is to get married and file together. You know, you would save astronomical amount of money tax-wise. Now, when we mention the word marriage in our community, for some reason, it feels like somebody is shooting an AK-47 into your house for some apparent reason. I don't know why, where we've gotten to that point, but tax-wise, it saves you astronomical amount of money. And any other race, I don't know I'm speaking about the Black community, but other races promote marriage because they know not only is it about love, but it is a financial responsibility too. And when you're filing separately, you're paying more tax individually. Even though one may get an extra refund of $2,000 or $3,000, but if you divide $3,000, if you divide $3,000, say the tax return is the refund, $3,000 by 52 weeks in a year, that is only $57.70. You can save $60 a week on your own. If you took that $60 a week and put it into a program with compounding interest, you would have been double that to $3,000. The average fund is about 8%, 7 to 8%, give or take. And that's compounding, which means on top of each other, on top of each other, on top of each other. Right? So, and if you have a living partner, you have to file separately anyway, unless you're married. So either you're filing single and you're paying the highest amount of tax regardless, or if they are head of household and there's a dependent, they're going to be paying less tax than you. But if you came together, collectively, you would be paying less tax.
All right, the next question is, do you offer consultations throughout the year, even when it's not tax season?
Yes, I work full-time. This is what I do full-time. So I offer consultations all year around, even when tax season is done and over with, because I do offer tax planning for families, for businesses, just so by the next time they file, they won't have significant issues that they were having previously.
Next question. Do you offer bookkeeping for small business owners?
Yes, I do. I am a pro advisor for QuickBooks. So the majority of my clients are on QuickBooks. It makes my life easier. It makes their life easier as far as keeping track of expenses, knowing profit, if they're on payroll, who they need to pay. Reporting wise, it's great keeping track of projects. If they want to know, the expenses of a specific project. It is a great tool to have for your small business, and it isn't a big expense. It is an expense that is definitely worth it. I have plans starting at $25 a month, $35 a month for QuickBooks, just to keep your small business in order. Because for an accountant, receiving receipts and bank statements is just a lot of work, and it's time consuming. So being on QuickBooks is a great way for you as a business owner to see your financial position at any time.
Is there anybody in the Zoom that have any questions for her directly?
Mm-hmm.
I don't have a question, but just super grateful to hear you give this complete, easy to follow summary of what we need to do, because it's like little things get fallen apart. You forget to do what you need to do. So just really thank you so much. And I'll definitely be reaching out to you to get more guidance.
Oh, definitely. I think it is something that is really misunderstood. And it's not rocket science. I don't believe it's rocket science. It's just something that is misunderstood, and it's not really taught in school, the actual meaning of tax, because a lot of systems that were created for control, right? So if you can control someone's financial position, where they live, how they think, what they do with their money, you basically can control them as a person. Right? So if you have a group of people that do not have any knowledge of the taxes they're paying from jobs that they're working and spending the majority of their time away from their family, you basically can control anything and everything that they do.
But you put it that way, it's a little scary, but that's what's happening. You're right. It is. That's exactly what's happening.
That's what's happening, because they say, oh, even when you go into a financial institution, not only a financial institution or a banking institution, say for instance, you're going in to purchase a vehicle. The first thing they do is they ask for your information, you give them their information, yada, yada, yada. They found you a deal, they got your APR, and certain things of that nature. And what do? They say, sign here, sign here, sign here, sign here, sign here, sign here. And you never take the time to say, hey, wait, hold on a minute. Let me take some time to read this before I sign here, sign here, sign here, sign here, sign here. That is on purpose. Right? Because when you withhold information from someone, they have no idea what they're getting into.
Mm-hmm. I had a question about the QuickBooks, but you answered it. I guess sometimes they want us to do to work with a CPA first. Do you just do all the services related to preparing the taxes?
So for instance, I'm a tax accountant, so I do work with CPAs. The difference between a tax accountant, I have a degree in business and a degree in accounting, so in taxes. So I am considered a tax accountant. A CPA takes 3 tests to become a certified public accountant. So that is the difference. That is the difference with what I do. But I do work with CPAs. Some of my clients use me for their returns. Some of them came in already with accountants or CPAs or EAs that work on their return. And it just depends on what they've hired me for at that particular time.
Okay, thank you so much.
Yes. So, but as far as CPAs, it just depends on what sector they in. They can primarily work on corporate returns, partnerships. I stop at partnerships. I do partnership returns and S corp returns. I don't really I've done corporate returns, but I really don't get into much of that. But I do LLCs, per 1040s, S corp returns, and I do also do nonprofit returns also.
All right, the next question in the chat says, I came in a little late, don't know if you already discussed this, but I was curious about how doing taxes for my business will change when I get married. Anything I should be aware of? I just got engaged.
Okay, and like I spoke on it a little bit. I know they came in late. Really, it depends on the profit or loss from the business, because any income that you've received, any taxable income, from you and your wife or spouse, any profit from the business will either be added. Now, if you have a loss in the business, it will be subtracted from your income. So for instance, if you make 40 and your spouse makes 40, you have a combined income of 80,000. So just say that's your taxable income. If your taxable income is $80,000 and you have a loss in your business of $10,000, now your taxable income is $70,000. Now the opposite way, if you and your spouse collectively, you have taxable income of $80,000 and your business has a profit, and when I say profit, I do not mean the revenue totally coming in, revenue minus expenses. If the profit of the business is $10,000, now you have taxable income of $90,000. So what you want to do as a business owner is to make sure that the majority of your dollars are being spent on the business, because that money is, or portions or deductions of that money is not taxable. Percentages of that money. Some have 100% deductions, some have percentages of deduction.
And then the last question, if I have multiple LLCs, can I combine my deductions when I file my taxes as being single?
So if I have multiple LLCs, can I combine my deductions when I file? Now, when you have multiple LLCs, they all have separate EIN numbers, which means you're supposed to file them separately. So if they have a separate EIN number, you need to file them separately on your 1040. So along with that, if you have, say you have a detailing business, you're going to report the income from the revenue from the detailing business, the expenses from the detailing business, the profit from the detailing business. If you own a hair salon, you're going to report and they all have separate EIN numbers. Now, if you had DBAs, so for instance, say if you had your detailing business and it was DBA, cars and trucks repair. Now DBA is doing business as. So your car and truck business is doing business as the detailing business, which technically would be one. Then you will be able to combine the deductions. But if you have separate EINs, if you have multiple LLCs, you normally do have separate EINs, you will have to file them according to the name of the EIN and the business, the NAICS code, and all those types of things.
And that's all for questions.
Okay, and this is, can I combine my deductions when I file my taxes as being single?
You just answered that one.
Yeah, I was looking at the last part of,
Gotcha.
but technically they were really referring to the business side of it.
Yep.
Right.
Any other questions in the chat for Nadiyah?
Any other questions?
Nadiyah, anything else? I'm gonna come on in.
No, I think I really tried to make it plain so people could understand exactly when they say, what is your filing status, exactly what that means and how it will affect your tax return. Being single in America, tax-wise, is not very beneficial unless you're purchasing items that have interest involved. So if you're buying a multifamily, right, or sorry about that. If you're buying a multifamily or anything of that nature, or anything, or investing, those types of things, you know.
Yeah. And you have one more question. Do you work with Zero as well?
Do I work with who? I'm sorry.
Zero, Xero, the company.
Oh no, I've never heard of it. Zero. Actually, I've heard of it. And actually, what is Zero? If anybody can
I don't know if they want to chime in. It's a bookkeeping system.
Oh, okay, like FreshBooks. And well, the majority of bookkeeping systems I work with, only because if you've been in one bookkeeping system, you've been in another. So it's just really navigating the bookkeeping system. But I do have other clients that are not on QuickBooks. I have clients that are on FreshBooks. Some of them have Oracle, some other type of bookkeeping service. But normally I can pretty much navigate through it and get exactly what the client needs out of that service.
Perfect.
Mhm.
All right. So once again, this is Nadiyah Bolling. If you want to get in contact her, give me contact information. Where can they find you?
Of course, okay. I forgot about that part, right? My contact information, I am located, my office is located on 96 Pequannock Avenue in Windsor, Connecticut. My website is www.mycapitaleast.com, which is mycapitaleast.com, and you can schedule consultations over the phone. You can come in and chat with me. I have tax appointments, whatever you may need for your small business or just you personally. You can go on that site and book your appointment. I am on Facebook, Capital East Travel and Tax. I am on Instagram, Capital East Travel and Tax. You also can reach me at my office number, which is 860-519-0455. Or you can actually reach me on my business cell, which is 860-818-0462, and text me a message and I will get back to you, or one of my agents will get back to you, depending on the service that you need.
And you're also an Entrepreneur Network member.
Oh yes, and that also.
Of course. Of course. Let me share my screen. I'm gonna share my screen and show them where to find you at. I got you.
Okay.
Yep, so I'm gonna share it. So if you're not a member of the Entrepreneur Network yet, all you have to do is click network, click members, slide all the way down. As you can see, some people in the day, we gotta put your profile picture in. She's right here. So if you're already a member, all you have to do is click message. It'll send a direct message to her. Any questions you have, you can send it directly to her. Click the follow button. She's putting her different information in there. It is also a section in here to keep up with all her ongoings and any tax questions that she has. Also, for those that came in late, if you click the video content library, that tomorrow this video will be up there live for you to come check out. So if you came in late, you can come back and watch it. It'll be there again exclusively in Entrepreneur Network. Any last thoughts you want to give to the people?
Thoughts or anything? I'm grateful for the opportunity. Thank you, Quentin. I really appreciate it. I think it's needed in our community. And even just small businesses, because we need to keep them running. We need to get funding for them. We need to patronize them. We need to have the services available. So whatever it is that you do as a business owner, we need you around, because we have a next generation that is looking at us for guidance. And as you know, they may not have guidance in their home, but if they can go to the local, barber shop, or they can go to the local juice shop, or they can go somewhere else where they see people like them owning businesses and, in the community and helping and being of service in the community, is something that is desperately needed for our children. And we would not be, a lot of us have education, but we would not be citizens of the community if we don't give back. And
100%.
that's desperately what we have to do as of now, because we see what's happening when we don't give back. We're making the money, people are, in business, they're making the money, they're flexing and flossing, but they're not giving back to the people that can't or don't have the knowledge. And it's okay to give back. You don't have to charge everybody every time you do it either, So that's really important in our community to make sure that we do give back.
Well, thank you. So again, Nadiyah Bolling, again, thank you for coming in. Again, she is not just a member. I also use her myself. We have a great relationship. If you in Windsor, stop by, coffee, she's there. She's here to help. She helps with funding. She helps with taxes. If you want to start a business, go to her. She'll help you out. Great overall person. Again, thank you for taking your time on a Thursday night to come in here and have a conversation about taxes. Hopefully you made it nice and easy for everybody, because when taxes come around,
I hope so. I try.
a lot of people get scared when you say that 3-letter
Right.
word. So
Exactly.
hopefully, as they can see with your personality, you're a great personality as well. So if anyone doesn't have any other questions, again, thank you for coming.
I do have a question, but it's not
Okay.
related to taxes.
Go for it.
Okay.
Well, it's just the background says travel, so I was curious.
Oh, yeah, talk about
okay.
your travel. Go ahead.
Yes,
Well,
I was wondering if,
No, go ahead.
no, that's it. I was just curious. Is there something there related to travel that?
Oh, yes.
you
I
offer?
talked about that a little bit in the beginning. I am a certified travel agent, so I have two aspects of my business. I do offer travel, whether it is group trips. I specialize in group trips, but we do honeymoons, personal trips, Disney, cruises, anything you can think of, international travel. I actually have a group of 11. We're going to Greece in April. So I just sent my aunt, my uncle there. They just came back from Dubai. I have other groups that went to St. Thomas,
Oh, that's awesome.
all over the world. So, and I do offer payment plans for the trips with a deposit. So if you want to lock in, and the reason why I offer travel, because business owners need time to relax, from
100%.
from the daily routine of running the business. So I decided, I offer both services. So
That's awesome. Thank you. All right, we'll follow up with you then. Thank you, Quentin.
And then last, someone asked, do you do business retreats?
For treats?
No, business retreats.
Oh, business retreats. I said, what
You organize business retreats.
Like coffee, candy? No, I'm just kidding. Okay. Business retreats. You know what? That may be something I need to look into, because I think that would be great just for business owners, just to get together and
we will talk. We will talk.
Yes, definitely.
We won't get them all.
Great.
They're all coming. We're all going somewhere.
I know. I mean, you know what? And I'm glad you said that, because that'll be next on my list. That's a great idea. But no, I appreciate everyone that came in to listen. And just me spreading the knowledge from what I've learned. I've been in accounting, finance, a lot of different sectors of accounting for over 25 years, nonprofit. So I've dealt with a lot of multi-million-dollar business owners, real estate, all truckers, everything. The majority of sectors I've been involved in. So I just really like to keep our community in the know as far as financially, because I think it's a system that is overlooked where we are. So, and once again, I appreciate you, Quentin, and everybody.
Thank you for coming in again. And quick plug, this Sunday, if you're a business owner, Sunday night, 7 p.m., we're doing our business accelerator. So if you're a business owner and you are in the chat, come on in Sunday night. I'll send that link out too. Come and talk about your business. Our goal, again, in the Entrepreneur Network is to help you as a business owner. So you come in, we're all one big family. If you have goals for April, we want to come in and help you with your April goals. Again, we're big on family, big on community. As you can see, I invited another member to come in to take the time out to inform us and give us information. So with that said, everyone have a great night. Again, this playback will be available tomorrow exclusively on the Entrepreneur Network. Everyone have a great night.
All right.